It's Wednesday, October 1st, 2025. In India, the financial year runs April to March, but in Germany, it's October to September. Today marks the start of their news cycle, a system that historically aligned with harvest seasons and later shaped fiscal planning.
Welcome to your daily news update on Blip Brief, small but almost everything updated every weekday. And speaking of news cycles, well, looking at the sources this week, the big theme feels like volatility. Global markets are definitely kicking off October with some serious anxiety. We saw that reflected right here in India. Both the Nifty 50 and the BSE Sensex closed down yesterday, just slightly, around 0.1%. So pretty flat start to the month.
Yeah, flat, but maybe soft is a better word. And that softness, well, it isn't just random noise. It's really driven by two big, almost opposing things happening at once.
Okay, what are they?
You've got the global picture, specifically the U.S. government shutdown. That's now confirmed, right?
Yeah.
Geopolitical risk.
Right.
But then locally, everyone's just laser focused on the RBI Monetary Policy Committee. Their decision lands today. So the market's just holding its breath. Will they pause rates? Cut them.
Exactly. Pause for stability or cut, signaling confidence in the domestic scene. That tension, global jitters versus local policy hopes, is what kept things pretty much neutral on the surface.
Okay, so the headline numbers were flat, but beneath that, money was definitely moving around, wasn't it? Showing where people did have some confidence.
Oh, absolutely. We saw some pretty explosive sector rallies. Look at the PSU Bank Index.
Yeah, that surged by 1.8%. That's a pretty big jump for one day.
It really is. And it suggests the market is pricing in continued government backing, maybe big infrastructure projects down the line. Investors are basically saying, hey, these public sector banks look undervalued given what policy might bring.
Interesting.
And we saw similar strength in materials, too. The metal index climbed over 1.1%. Seems like strong global demand signals are getting noticed there.
And you can see that playing out in specific stocks, too.
Yeah.
The big money flowed into industrial and financial names. Hero MotoCorp was the top gainer, up 3.2%.
Sharp move.
JSW Steel climbed 1.8%, and Inducent Bank was up 1.7%. Seems like clear capital rotation happening.
But, for every gainer, there's a loser. And some heavyweights took the hit this time. Consumption stocks like ITC and the big telecom Bharti Airtel both fell about 1.2%.
Retailers, too.
Yep. Trent and Titan also dropped around 1.1%. It looks like a classic move away from those defensive, consumer-focused stocks. When investors see global trouble brewing or expect big policy news, they often sell the reliables to fund bets on higher beta sectors like metals or infra.
Makes sense. Now let's switch to corporate action. Big news today. The Tata Motors demerger is officially effective. Splits the company into two.
Right, two separate listed entities. And the theory is always that this unlocks value for shareholders, right? A clean separation.
Always the theory.
Theoretically, yeah. That's the key word.
Yeah.
What really jumped out from the sources was this note from Jefferies. Even after the demerger, they see a potential 15% downside for the stock.
Wow, 15%. That's significant caution.
It is. It's not just background noise. It suggests that, okay, the structural change makes sense, but investors want proof. They want to see actual performance from these two new units before they buy into the upside story, especially with, all the headwinds in the global auto industry. Value unlocking might take a while.
And that skepticism about valuations ties nicely into the IPO frenzy we're hearing about. October's supposedly set to be a record month. Over $5 billion in deals expected.
Yeah, huge projections. And you've got giants like LG Electronics gearing up, and of course, the massive Tata Capital IPO setting the stage.
Okay, but what's the real story there?
Well, the fascinating part, the real insight into the market mood, I think, is in the Tata Capital pricing. They set their IPO price band at a 55% discount to its valuation in the unlisted market.
55%? Wow, that's more than just caution. That sounds like the public market saying hold on to private equity valuations.
Exactly. It's a huge signal. It suggests the era of just assuming sky-high valuations for VC-backed companies going public is, well, slowing down, even for a top name like Tata.
So the IPO window is open, but buyers are demanding a serious discount.
Precisely. They want a massive safety margin. It shows investors are really wary about paying those private market prices when something hits the public exchange.
Which brings us back to the health of the domestic economy itself. We just got the latest fiscal data, didn't we? The government's fiscal deficit widened through August.
Yes, it reached 38.1% of the annual target.
Why the widening?
It's a fairly simple equation, really. Government spending ramped up, which you often need for growth stimulus.
Right.
But net tax collections just didn't keep pace. So keeping that deficit number, that 38.1%, under control is going to be really important for bond markets and overall stability going forward.
And on that note of stability, the Asian Development Bank, the ADB, just trimmed India's growth forecast slightly.
Yeah, they dialed it back to 6.5% for this fiscal year and the next. And their main reason, they specifically cited the potential negative impact of higher U.S. tariffs as something to watch closely.
So it just shows you can't really insulate the domestic economy completely from what's happening globally, especially with trade.
Absolutely not. But look, there were also some domestic policy shifts kicking in today, October 1st, aimed at helping businesses navigate these things.
Like what?
Well, businesses now have to deal with the mandatory rollout of the new GSTE invoicing rules. That's a big digitization push, requires a lot of compliance work, particularly for smaller firms.
Okay. Anything else?
We also saw new RBI norms taking effect related to interest on advances and check clearing. The goal there seems to be faster, more transparent processing for everyone.
And for savers, any changes to small savings rates? PPF, NSE?
Nope. Static news there. The rates for those popular schemes remain unchanged for the October-December quarter, so no change for savers this time around.
Okay. But some relief for exporters, right?
Yeah. Yes, that was a significant move. The government extended the RODI-TEP scheme, that's the remission of duties and taxes on exported products. Basically, it's an export support measure.
How long is the extension?
Extended until March 2026. It's directly aimed at helping exporters deal with those external pressures, like the U.S. tariffs, and maintain competitiveness.
That sounds like a helpful buffer. But businesses are still facing cost pressures, aren't they? Energy costs.
Definitely. Input costs moved up, commercial LPG prices saw a hike, and aviation turbine fuel, ATF, jumped substantially as part of the regular monthly review.
And when ATF goes up?
It feeds straight into airline costs, logistics, supply chains. It's a definite inflationary nudge right at the start of the quarter.
Okay, let's pivot to those global headwinds now. The big one being the U.S. government shutdown scare, which isn't really a scare anymore, is it?
No, it's reality now. The White House issued the order after the Senate bill failed. And for global markets, this kind of political mess is just toxic. We saw an immediate, almost textbook reaction in currencies and commodities.
Right, the safe haven rush. Gold prices.
Edged higher, getting close to record levels again. Investors just flock to hard assets like gold. When Washington can't get its act together, capital hides.
The U.S. dollar reaction was interesting. It actually softened, trading near a one-week low. Usually, instability pulls money to the U.S.
True, but the dollar really hates this kind of uncertainty, especially when it messes with economic data. The shutdown threatens to delay key releases, jobs numbers, inflation reports, GDP.
Ah, so the Fed is flying blind.
Essentially, yes. And investors see that fog, that lack of clarity on future Fed moves, as a reason to step back from the dollar temporarily. Makes it less attractive in the short term.
And there's a direct human cost, too. The FAA furloughing employees.
Yeah, over 11,000 people, apparently. That's expected to put a real strain on aviation, potentially causing travel headaches and delays globally.
And beyond the shutdown, U.S. trade policy is still a mixed bag, creating winners and losers.
Definitely. We saw a potential direct hit on the Indian film industry. This threat of a 100% tariff on films made outside the U.S., that could seriously dent U.S. revenues for Indian movies, a major trade barrier.
But then, at the other end, Big Pharma negotiated some relief. Pfizer.
Right, Pfizer managed to get a tariff reprieve, but, and this is the crucial part, only by agreeing to slash prices on some drugs by up to 85% for the U.S. market.
Wow. So pay up or pay up differently.
Exactly. It's transactional diplomacy in action, a massive concession to avoid the tariff wall. Really highlights the stakes in global trade right now and, frankly, where the negotiating leverage often lies.
Got it. And finally, on the international capital front, any signs of stress there?
Actually, the opposite in one case. Kuwait had a very successful bond sale, $11.25 billion, highly oversubscribed, attracted more than double the orders they were looking for.
So even with all the turmoil, there's still strong demand for stable quality debt.
Absolutely. It shows there's still plenty of liquidity out there chasing yield, especially from stable sovereign issuers.
All right, let's completely change gears for our innovation segment. This week, speeding up space travel. Sounds ambitious.
It does. This is a materials science breakthrough, really. Researchers have developed a new rocket fuel compound, manganese diboride.
Manganese diboride, okay.
It's a boron-rich material, and the results they're reporting are, well, almost hard to believe.
The sources said 150% more energy density than current solid fuels. How is that even possible safely?
Well, the secret seems to be its atomic structure. It's described as highly unusual, very strained. This structure allows it to pack way more energy into the same space.
Like a coiled spring.
Kind of, yeah. A tightly coiled spring of energy. But critically, it stays extremely stable until you deliberately ignite it. If this can scale up from the lab, it's a game changer for propulsion.
The implications are huge, aren't they? 150% more energy density.
It could completely change the economics of space exploration. Less fuel means less weight, which means faster journeys, cheaper missions.
Trips to Mars, beyond,
Yeah.
suddenly seem a lot more feasible, or at least quicker.
It could fundamentally shrink travel times. It's a genuinely disruptive discovery, really shows the payoff from investing in basic materials research.
An incredible potential leap.
Hmm.
Okay, so wrapping up our deep dive today, we saw Indian markets starting the quarter flat, caught between RBI anticipation and that U.S. shutdown reality.
Yeah, with clear caution showing up in things like IPO pricing, even as certain sectors like PSU banks saw strong inflows.
We covered the widening fiscal deficit, new domestic rules, energy cost hikes, and that crucial export scheme extension.
And globally, the shutdown's ripple effects on currencies and gold, plus those ongoing trade tensions impacting specific industries like film and pharma.
And we finish in that high note, the potential for much faster space travel thanks to manganese diboride. Quite a range today. Remember, that core tension, global risk pushing towards safety versus local policy, hopes driving sector bets seems to be the key dynamic right now. And just before you go, a quick note, this deep dive commentary was put together using advanced AI. We always try for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.